Bismillahirrahmanirrahim. Yang berhormat Senator Tengku Datuk Seri Utama Zafrul, Tengku Abdul Aziz, Minister of Finance, yang berbahagia Tan Sri Michael Yeoh, President of KSI Strategic Institute for Asia Pacific, Datuk Seri Muhammad Iqbal Rauter, Chairman of the Economic Club Kuala Lumpur, distinguished speakers, panelists, and participants, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a very good morning. On behalf of the ECKL and KSI, it gives me great pleasure to welcome you to the 2021 Malaysian Banking and Finance Summit with the theme, The Future of Banking in the New Normal, Disruptive Innovation, Technology, and Transformation. We are indeed honored to have the Honorable Finance Minister, Tengku Datuk Seri Utama Zafrul, delivering the opening keynote address on the role of banks and financial institutions in supporting national economic recovery. Thank you, Yang Berhormat Tengku, for gracing this summit despite your busy schedule and back-to-back with the launching of the Securities Commission's Capital Market Master Plan after this event. Much appreciated indeed. Ladies and gentlemen, I thought as a former banker, it would be useful to look back at the previous crisis and how the banking and finance sector has progressed. Over the past 3 decades, we've had the benefit of experiencing 3 major crises: the Asian financial crisis of 1997-1998, and the global financial crisis 2008, and the financial market turbulence in August 2015. The Asian financial crisis hit Malaysia badly due to, among others, excessive borrowings by the corporate sector, including borrowings in foreign currency to fund Malaysian ringgit assets and funding long-term projects with short-term funds. A classic case of asset liability mismatch, if you like, which was ignored during periods of excessive market exuberance. So when liquidity dried up, interest rates shot up to between 12 to 18% in the interbank market, and the ringgit devalued to 4 ringgit level against the US dollars, many corporates became insolvent overnight. This in turn affected the capital markets and the banking system. Forced selling of collateral shares pushed down the KLCI to an intraday low of 262.7 points on 1st September 1998, creating more losses to corporate and individual investors alike. Asset quality of financial institutions deteriorated and necessitated Dana Harta to acquire the bad loans from the FIs and Dana Modal to recapitalize some of them. From the peak of 10% GDP growth in 1996 and 7.3% in 1997, our GDP contracted by 7.4% in 1998 before rebounding to a 6.1% growth in 1999 and 8.9% in the year 2000. The selective capital controls and the pegging of ringgit at 3 ringgit 80 cents to the dollar enable a more accommodative monetary policy to be pursued with low interest rate to stimulate consumption and investment. The financial institutions were subsequently consolidated into 10 banking groups and later into 8, with increased capitalization, good risk and liquidity management, and they are very well regulated and supervised by the Central Bank Bank Negara Malaysia. The second major crisis came in 2008 with the collapse of subprime lending in the US that caused contagion effect to Europe and triggered the global financial crisis. By September 2008, many of you remember that Lehman Brothers, among others, had collapsed. The KLCI dropped to a low of 829.4 points on 29th October 2008, in line with a slump in global equities market. Malaysia's GDP contracted by 4.8% in 2009 before rebounding to 7.4% growth with the benefit of the 60 billion ringgit of stimulus package. The strategy of keeping businesses afloat and people employed worked well, such that when demand returned in 2009 and 2010, the manufacturers had the capacity to fulfill the orders. Malaysia and its financial system were also in better shape, with better capitalized and well-managed banks and relatively low corporate debt level. Then came the sudden turbulence in the financial markets in August 2015 that caused the ringgit to weaken to 420 level. And by 14 August 2015, the KLCI had fallen by 8% to 1,597 points. And then a special economics committee was set up on 26 August 2015 to formulate strategies to maintain economic growth and boost confidence in the ringgit and the stock market. Measures included the revival of value cap to instill confidence and help stabilize the stock market. Confidence was restored and the economy continued to grow by 4.4% in 2016 and 5.8% in 2017. Ladies and gentlemen, the three crises mentioned just now pale in comparison to the global COVID-19 pandemic we are experiencing today. With more than 219 million cases and 4.5 million deaths worldwide to date, it is causing untold suffering globally. Malaysia alone had recorded 2.1 million cases and more than 23,000 deaths as of yesterday. No one anticipated the global COVID-19 pandemic to hit the world this badly. Global economy contracted 3.2% in 2020, with the UK suffering from the steepest contraction of 9.8%. Malaysia obviously was not spared, with our GDP contracting by 5.6% in 2020. Unemployment rate rose to 4.8%. That means 777,000 unemployed persons as of July 2021. Median monthly household income declined by 11.3% to 5,209 ringgit in 2020. And poverty incidence rate increased from 5.6% in 2019 to 8.4% in 2020, meaning there are now some 640,000 households living below the poverty line income of 2,208 ringgit per month. The government has announced 8 economic stimulus packages totaling 530 billion ringgit, from Prihatin back in March 2020 to more recently Pemulih in June 2021. With the benefit of the various stimulus packages and the gradual reopening of the economy following increase in vaccination rate to 58% yesterday, this should provide enough assurance for the economy to record a full year growth of 4% at the top end of Negara's official forecast. And barring unforeseen circumstances, and with the reopening of the economy from the fourth quarter of this year, I am hopeful that the 2022 real GDP growth forecast of 6%, as forecast by some houses like Maybank, will be realized. This will lead to lower unemployment rate and improved household income and well-being in 2022. Ladies and gentlemen, apart from the government's stimulus packages, one of the main factors enabling economic recovery is the resilience of the financial system and the capital markets. Having learned the lessons from the Asian financial crisis and the global financial crisis, the banking sector is now better capitalized, liquid, better managed, and very well supervised and regulated. Based on Bank Negara Malaysia statistics, the core equity tier 1 capital ratio of the banking system of 14.59% as at 31st July 2021 is significantly higher than the 9% core capital ratio back in 1997 and 10.6% in December 2008. Asset quality of the banks have improved significantly, with net impaired loans ratio improving from the high of 13.59% back in 1998 to 2.24% in 2008, and now only 1.03% as of July 2021. And likewise, loan loss cover ratio similarly improved tremendously from 39% in 1997 to 75% in 2008, and today to 112% in July 2021. And with the loans to deposit ratio improving to 87.2% as of 31st July 2021, we believe there is sufficient liquidity for the banks to fund future loans growth and to grow the economy further. Apart from playing the traditional role of mobilizing funds from depositors and channeling them to productive sectors of the economy, Malaysian banks and financial services companies are also well represented in our stock market, with significant weighting in both the KLCI and the FTSE4Good Bursa Malaysia Sustainability Index. The 8 banking stocks alone, that means Maybank, Public Bank, CIMB, Hong Leong Bank, RHB, MBank, Affin, and Alliance, have combined market capitalization of 292 billion ringgit, or 17% of the total market capitalization of 1.7 trillion ringgit as at the end of July 2021. On the ESG front, financial services stocks make up 38.6% of our FTSE4Good Bursa Malaysia Index weightage, compared to 12.8% for telco and media, 10.8% for utilities, and 10.5% for consumer products and services. We expect these financial services companies to play a major role in sustainability and influencing corporate Malaysia committing towards net zero carbon emissions by 2050. Ladies and gentlemen, apart from the Finance Minister's keynote address, we will have 4 very interesting panel sessions on the future of banking to be moderated by Datuk Maznah Jalil, digital banking and fintech to be moderated by Datuk Wee Chuan Beng, sustainable banking and finance to be moderated by Datuk Nuripah Kamso, and achieving customer satisfaction, how people, technology, and processes can meet and exceed customer satisfaction to be moderated by Datuk Dr. Basir Hassan. We will also have Yang Berhormat Datuk Seri Mustafa Muhammad delivering a special address on My Digital Initiative and 12 Malaysia Plan at 12:30 p.m. And later, our Deputy Governor of Bank Negara Malaysia, Datuk Sheikh Abdul Rashid Ghafur, will be delivering the closing address at 4:30 p.m. Thank you again, Yang Berhormat Senator Tengku, for honoring us with your presence this morning. Indeed, we have lots in store today, and I wish everyone productive deliberations ahead. With that, let me hand over to Tan Sri Michael Yeoh, who will be delivering some introductory remarks. Tan Sri Michael, over to you. Thank you.
Thank you very much, Yang Berbahagia Tan Sri Abdul Wahid Omar, Yang Berhormat Senator Tan Sri Datuk Seri Utama Zafrul Abdul Aziz, Minister of Finance, Yang Berbahagia Tan Sri Abdul Wahid Omar, Chairman Advisory Council of the Economic Club of Kuala Lumpur, Yang Berbahagia Datuk Seri Muhammad Iqbal, Chairman Economic Club of Kuala Lumpur, our distinguished speakers, ladies and gentlemen. I'm pleased to add on to the very warm welcome that earlier Tan Sri Wahid Omar has delivered. I once again would like to thank the Honourable Minister for officiating today's conference with his keynote address, and also to thank Datuk Seri Mustafa Muhammad and the Deputy Governor, Dr. Sheikh Abdul Rashid, for agreeing to speak at today's conference. We are delighted and honored to have several top bankers addressing us today at this annual Banking and Finance Summit, starting with Tan Sri Wahid and the Finance Minister, who are both top bankers themselves, and later will be joined by the CEOs of OCBC Bank and HSBC Bank. I must thank the Economic Club of Kuala Lumpur for agreeing to organize today's summit with us, and the Association of Banks Malaysia for the support of today's conference. As mentioned by Tan Sri Wahid earlier, the conference today will address 4 key challenges facing the banking sector: the future of banking in the new normal, digital banking, and the role of technology and fintech in the banking industry, sustainable banking and finance, as well as customer satisfaction. I think all of these are important issues that needs closer deliberation and examination, which I'm sure our many speakers will be able to share with us during their sessions. Banks are the lifeblood of the economy, and all entrepreneurs, including SMEs, depend on banks to survive and to grow and thrive in the business field. And we do hope that during this pandemic, the banks and banking community will continue to be supportive of SMEs and the wider corporate sector. Let me end my very brief remarks by once again thanking our many sponsors for supporting us once again. Thank you to the Honourable Minister and the Minister for Economy and the Deputy Governor of Bank Negara and all our many speakers for agreeing to be with us today. Sekian, terima kasih.
Thank you, Tan Sri Abdul Wahid Omar, Chairman of the Economic Club of Kuala Lumpur, for Excellent welcoming remarks. Thank you. Appreciate that you went through the different crises to give us perspective, and also that to remind us that we are a resilient country, that we've weathered through many crises, and we will come out stronger after this. Thank you also to Tan Sri Michael Yeoh for the very brief remarks and welcoming all the speakers and role players today. Now, without further ado, ladies and gentlemen, I have the privilege and honor of inviting YB Senator Datuk Seri Utama Tengku Zafrul Abdul Aziz, the Minister of Finance, to deliver the opening keynote address on the role of banks and financial institutions in supporting the national economic recovery.
Yang berbahagia Tan Sri Abdul Wahid Omar, Chairman of the Advisory Council of the Economic Club of Kuala Lumpur. Yang berbahagia Tan Sri Michael Yeoh, President of the KSI Strategic Institute for Asia Pacific. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh and good morning. Foremost, allow me to express my gratitude to the organizer of the 2021 Malaysian Banking and Finance Summit for the honor of delivering this morning's opening keynote address. 18 months since COVID-19 first shook the world, humanity continues to grapple with the twin shock of the pandemic, namely the direct public health impact and economic effects, as large parts of the global economy were shuttered to contain the spread of the virus. Malaysia is no exception, recording over 2 million cases and losing over 21,000 lives thus far. The economic price has been equally dear and unequal. While Malaysia's GDP contracted 5.6% in 2020, it is the vulnerable segment of our society that has been hit the hardest. And the battle is far from over. Already new challenges are emerging in the form of more dangerous variants and growing community transmissions, reflecting the difficult path to recovery. At the same time, our world has transformed dramatically since COVID-19. The pandemic has changed the old ways of how we earn a living, shop, learn and play. In just 1 year up to June 2021, we have seen e-wallet volume increase 89% to 468 million transactions. Merchant participation for QR payments jumped 57% to 1 million registrations. And online banking volume improved 36% to 12.1 billion transactions. Despite these challenges, I am optimistic that we are at the cusp of recovery. For the rest of my keynote, allow me to share the form and trajectory for Malaysia's safe exit from lockdown and the recovery of our economy, guided by the National Recovery Plan. The role financial institutions played thus far and their role, together with wider efforts by the government in supporting recovery and building back better. Ladies and gentlemen, the National Recovery Plan, or NRP, was introduced in June this year as a comprehensive approach to restoring consumer confidence while allowing the economy to open safely. At its heart, the NRP will catapult the nation on the path to recovery. Through 3 key headline indicators in line with the national vaccination rate objectives, all but 2 states have graduated to phases 2 and 3 of the NRP. Testimony to the NRP's dynamic approach while ensuring both lives and livelihoods are preserved, the government has recently announced the easing of restrictions for those fully vaccinated, a travel bubble for tourist destinations in Malaysia, beginning with Langkawi on Hari Malaysia, and ongoing efforts to simplify SOPs to just 10 in the coming weeks. Alhamdulillah, we have seen some great progress thus far. Since its inception, we have dramatically improved testing capabilities. We continue to make testing widely available and affordable. And our contact tracing capabilities are being enhanced through the use of technology and mobility data. On the vaccination front, the key enabler of Malaysia's recovery, we continue to fire on all cylinders. As of 18 September, more than 21 million people, or 93% of the country's adult population, had received their first shot, including 18 million, or 78%, who are now fully vaccinated. Consequently, we have seen our hospitalization and ICU rates stabilize in recent weeks. Inshallah, we are well on our way to have 80% of the adult population fully vaccinated by end September and 100% by end October. Thereafter, the government will progressively update the NRP to prepare Malaysia for the next normal of living with COVID-19 as an endemic disease. How do these factors add up at the economic level? For one, the expected reopening of the economy will support our recovery path, complemented by stronger external demand, ramp up in commodity production, materialization of pent-up demand, and continued investment in large-scale infrastructure projects. All in, Malaysia's GDP is projected to grow between 3 to 4% in 2021. The recovery is expected to accelerate further in 2022, with the World Bank and IMF projecting growth rates for Malaysia of 5% and 6% respectively. This recovery will be supported by a gradual normalization of economic activities as well as the positive spillovers from continued improvement in external demand. Ladies and gentlemen, since the pandemic first hit our shores, the government has introduced 8 assistance packages in addition to Budget 2021. All in, over 260 billion ringgit has been disbursed as at end July, benefiting over 20 million rakyat and 2.4 million businesses. In that respect, the banking industry has been instrumental in maintaining livelihoods while providing support to the wider economy. As part of the Prihatin Assistance Package, the banking sector implemented the deferment of all performing loans for a period of 6 months up to September 2020 and credit card outstanding balances that can be converted to a 3-year term loan with reduced interest rate. Since then, the banking industry continues to facilitate repayment assistance for borrowers, including most recently under the Pemerkasa Plus and Pemulih Assistance packages, which has benefited 2.6 million borrowers, including 81,000 MSMEs from the period of 1st of June to 20th August 2021. Other key measures to support the economy include the reduction in the overnight policy rate by 125 basis points since January 2020, support for SMEs including 154 billion ringgit in bank financing disbursed in the first half of 2021. This includes 3 billion ringgit disbursed from the various financing schemes provided by Bank Negara Malaysia, like the Targeted Relief and Recovery Facility, Penjana Tourism Financing, High-Tech Facility, SME Automation and Digitization Facility, benefiting more than 12,000 SMEs in the same period. Expansion of the Ithaca Blended Finance Program, which combines social finance funds, including zakat, cash wakaf, and social impact investment, with microfinancing to provide seed capital and working capital for micro entrepreneurs. In addition, the program was expanded to include upskilling elements. As of 31st July 2021, Ithaca, led by Bank Islam, has enrolled 98 micro entrepreneurs under a structured training program, which approved microfinancing and zakat funds of approximately 2 million ringgit. In addition to Wilayah Persekutuan, the program has now been expanded to include Selangor and Perlis. The participation of 2 additional Islamic banks, Seambi Islamic and Bank Muamalat, will further increase the impact and reach of the program. And for the most affected borrowers, assistance to restructure one's finances via the Agency Counselling and Pengurusan Credit, or AKPK. Ladies and gentlemen, 2022 will be a critical year for Malaysia, a rare window to jumpstart not just an economic recovery, but the recovery of industries, livelihoods and jobs, especially those hit hardest by the pandemic. In that respect, Budget 2022 will remain expansionary and is conceptualized as a recovery budget while complementing the government's wider and longer-term reform efforts under the 12th Malaysia Plan. Budget 2022 will focus on 3 Rs, namely recovery, resilience, and reform. And it is through those 3 lenses that banks and financial institutions, including development financial institutions or DFIs, will play a critical role moving forward. As the health of the financial sector is tied to the wider economy, it is crucial that the banking industry doubles down on driving a strong economic recovery while supporting business continuity, especially in jump-starting businesses when the economy reopens. In this respect, the banking industry is expected to facilitate lending to businesses with accommodative financing and repayment terms, including participating in the offering of the Ithaca program that supports micro-entrepreneurs to start and sustain their business. Provide non-debt-based facilities such as the Chapna and Jana Niaga liquidity schemes that relieves cash flow constraints of SMEs without increasing their gearing positions. Encourage digital payments, including through the onboarding of small merchants to accept QR payments and ensuring affordable merchant fees. And supporting, including via the various financing schemes, the most underserved segments of borrowers, be it the hospitality sector, micro-enterprises, or women entrepreneurs. In enhancing our social protection program, I am pleased to share that the government, in concert with Bank Negara and the insurance and takaful industry, is in the final stages of rolling out the Perlindungan Tenang voucher program, which will provide financial assistance for up to 8.4 million Bantuan Prihatin Rakyat recipients in purchasing insurance and takaful coverage from licensed providers. In the long run, the government and Bank Negara will continue to stress the importance of financial literacy and sound financial decision-making via the various efforts under the Financial Education Network. In building resilience, banks and financial institutions play a crucial role, amongst others, supporting your clients in their transition to the needs of a new normal, including embracing digitalization in their business focus and operations. Enhancing the role of financial intermediation throughout the business cycle of any enterprise, be it the aspiring entrepreneur or the conglomerate on the verge of an IPO, and exploring alternative forms of financing, including blended finance, supply chain financing, or new trade-based facilities. These efforts will complement wider initiatives by the government, including by the National Fourth Industrial Revolution policy, where digitalization and technological adoption are crucial in boosting our economic prospects and resilience in accordance with the Malaysian digital economy blueprint. Just as it is crucial for us to exit this pandemic safely and systematically, it is equally critical that we build back better. That is why the financial sector must step up and play its part in the climate and sustainability agenda. It is encouraging to see that the financial sector is stepping up on this front, including via the offering of sustainable finance solutions and assistance to companies in their transition journey. However, more can and must be done. Make no mistake, as a mobilizer of capital, the banking industry is key in facilitating the transition of companies towards low carbon and sustainable practices via financing and investment beyond the pandemic, be it supporting renewable energy adoption, new technologies, or novel ways of doing business. Of course, a factor in building back better is changing how banks themselves operate. At a global level, it is encouraging to see that more than 45% of the global banking industry have signed up to the UN Environmental Finance Initiative's principles of responsible banking. Out of these, 44 of them have formed a net zero banking alliance, planning to fully decarbonize their loan books. I urge more financial institutions in our country to follow suit, which will augment their business with the objectives of the Sustainable Development Goals and the Paris Climate Agreement. Doing so will ensure the deep integration of sustainability across all business areas of a bank, from strategic decisions, credit appetite, to procurement. Efforts like this will certainly complement the government's embrace of the UN Sustainable Development Goals in its annual budgets, beginning with Budget 2021. This feature will continue in Budget 2022, as well as through wider initiatives like the SDG-aligned 12th Malaysia Plan and the Shared Prosperity Vision 2030. Ladies and gentlemen, if the pandemic has taught us one thing, it is that rarely can we do it all alone. The path to recovery, resilience, and shared prosperity will demand nothing short of a whole of nation approach. To that end, I call on all parties, government, private sector, civil society organizations, and yes, banks and financial institutions to come together as one Keluarga Malaysia. In particular, I call on the banking industry to work hand in hand with the government to support the rakyat and businesses on our path to recovery and in building back better. On that note, allow me to thank and congratulate the KSI Strategic Institute for Asia Pacific, the Economic Club of Kuala Lumpur, and the Association of Banks in Malaysia for organizing today's Malaysian Banking and Finance Summit. Thank you for your attention, and I wish you a fruitful discussion ahead. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.